And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning. Welcome to the Market Forecast. Today is Monday, May the 16th. I'm John Hoagland. Thanks for trusting me with your time. Always excited to get back into the markets on Monday morning. If you're already in the markets, hopefully things are going your way, and we'll look for a continuation of that trend, I hope, to you. As far as economic numbers this morning, we don't have a lot coming out this morning, but we do have a pretty important list this week. This morning, the Empire State Manufacturing Index came out. We also have one talking Fed, and let's take a look at what we've got going on this week. I know we have retail sales. Where is it? Strange. It's not letting me switch. It's always something. Well, maybe we come back to that. This is very strange. Here we go. Tomorrow, retail sales and industrial production. I just want to make sure I have the right information for everybody. Housing starts and permits on Wednesday. EIA Petroleum Stats Report as usual on Wednesday. Jobless claims, Philly Fed, and existing home sales on Thursday. And that's it for the week. Really nothing on Friday. As far as earnings are concerned, the focus is really going to be on the retail. We have Tuesday morning Walmart, Home Depot, Wednesday morning Target and Lowe's, and Thursday morning Macy's. And that's pretty much going to round out, I believe, the bulk of our earnings for this year, for this quarter, I should say. U.S. stocks were set to open a little bit lower. Looks like the S&Ps have just come off of settlement a little bit. Nothing really amazing going on in the markets here this morning. A lot of traders focusing on, is the Fed going to be able to provide a soft landing for the economy? Jay Powell has been speaking. He speaks on Tuesday, by the way. Expected to reinstate that the 50 basis point increases for the next two meetings are solid. They're not going to go for 75 basis point increases, according to Chairman Powell. So we'll have to see about that. Crude prices hold resistance as China's economy reels from the lockdowns. So some question as to Chinese demand for crude oil with those lockdowns. So as always, make sure you like, share, comment, question, feedback, and heckling and love are always welcome here on the Market Forecast. VIX this morning, see if I can get to it. Up a little bit, down under 30 again, 28.96. The yield on the 10-year, 2.9, which is where it's been kind of holding. In the dollar index, wow, another new high here, $104.41 in the overnight session. So the dollar seeming to be doing pretty well. And how is everybody doing out there, huh? Again, we've got a whole week. Take your time, be patient. I think some of the markets are telling us it's a good day to be patient. We've got lots of markets in rollover or coming into rollover, which is always something that we want to keep in mind. I got to say good morning to everybody this morning. Good morning, Brian, Charles, Theo, Billy, Shaw. Good morning, Zachary, Tachyon, Alessio, Robert. Good morning, Manuel Caesar, Sonny. Good morning. Good to see everybody. Scott saw and he conquered. Marcelo, Alfred, Dan Trader, Tachyon, working on that discipline. Vince. Good morning, sir. Jordy, Terry King, Bill, Zorain, Trader Hertz, Algo Trading. Hi, nice to meet you. John Doherty, always a pleasure to see you, sir. Hope you had a nice weekend. Jay Crockett, my brother Rick, love you, buddy. Mid-Country Gaming, Frederico, good morning, Kevin. RPS, Sarah, blessings and love to you as well. Three Lions Insight, Three Lions, I guess that is. Don't know if that's the same person. Zachary, David, Vince, Monday. Yup. Retail will focus in the U.S. this week. Yes, retail sales earnings. Yep. Kevin, we're good to know that you're on it. Joe, good to see you. Jake, Michael, yeah, the 11/29 eclipse, 162 days from 2/10/27 looks good. Should hold this week. I was fortunate enough to wake up about midnight last night, and the clouds had parted, so I was able to catch a good part of that eclipse last night, which kind of made me a little tired this morning, but it's always cool to see, and we never know how really that is going to affect us in the markets. It's a kind of a strange thing. Andres, Leekram, good morning. John, Michael, Glitter Sandwich, good morning. ZK, Rusty Golfer, Cody, Jerry is awake. Can you, RPS Capital, can you explain why the dollar does well when we're under these types of economic pressures? I'm sure I can look on Google and read about it, but this may be easier and faster. Well, when rates start to go higher, it makes the currency more expensive. It makes it more expensive to borrow, of course, and in this case, it seems to be increasing its value because the Fed is working on taking dollars out of the market. So supply, demand, fewer dollars, price goes higher. Who knows how this is all going to work out? It's going to be an interesting one. Rob T, Chris, Elber, P. Hunter, Safe Haven directly and indirectly through Treasuries. More thoughts there. Thank you. Monday, super full, big moon. Jeff. Oh, okay. All right, Jeff. Three lines is Jeff. Razor Trades. P. Hunter, starting a new combine today. Good luck, P. Hunter. Just stay patient. Remember, the goal is manage risk first. Always be here to play for tomorrow. Always be here tomorrow. U.S. dollar up, also up on interest rates differential, both actual and expected. Thank you for that. All right. Today, Monday, group coaching. Good morning, Lemuel. Haven't had coffee yet. All right, well, I'm having my coffee too. It's the beginning of the week. This week starts a new chapter in this year's book of trading. And I'm always eager and excited to get back to business. Weekends are great. Vacations are great. It's good to get away, and it's good to get back. I miss you guys, and I miss the markets. And I wasn't really involved in the markets on Friday, so I didn't really get to get my full fix last week. So we'll see what happens this week. Group coaching today, make Hogue money tomorrow. Looking forward to it. I think I've got some. I haven't had a chance to go through my emails here yet, but I'm looking forward. I think there's some good ideas or feedback for Make Hogue Money, and I'm looking forward to reading those. And we are in pretty good shape here. Let's take a look here, starting with the S&Ps. Now, S&Ps roll in approximately 3 weeks. Let's take a look. All right, so here's the daily chart, of course. Always start with the longest time frame or a longer time frame. New day, fresh start, nice. Empire State Manufacturing May down 11.6 estimated. 15 previous 24.6. Interesting. Is there a way to make ZK money? Yeah. Hard work, perseverance, self-knowledge, market knowledge, mix it all up and come up with a strategy, and you can make money. Ouch. Yeah, right, Zachary? Okay, so here's the daily. Obviously, our downside structure still remains. I'm a little bit concerned for our downside traders if we can reach and accept a back above weekly kickoff high, which is 40.48, which was last week's weekly kickoff low. All right, another hollow rally on Friday. I mean, look at the big up day we had on Friday that I missed. Low volume. Losing 2,000 in open interest. So all of these moves to the upside in the past, in the recent history here, have been hollow, much the way the one it was yesterday. Now, it doesn't mean that things can't change, but that low volume drop in open interest on this push to the upside just leads me to believe that this was more about a profit-taking event than anybody coming in to just put in a bottom. And I see that there's a lot of speculation in the news. Is the bottom in? Is the bottom not in? Whatever. We're trading what we see here on a daily basis, and whether the bottom is in or not, I don't think is all that important. Of course it is in longer time frame, but for day traders, I'm going to be focusing on the fact that we did not impress as far as volume and open interest is concerned on the way up here. So, we're looking at the rollover, which is starting in about 2 weeks, and it's going to go for about 2 weeks. So we've got, at least for now, some okay information as far as volume and open interest is concerned. Again, which leads me to further believe that this push to the upside on Friday was more about profit taking than new business coming in. Then when we look at the weekly kickoff high, this 40.48 level, there's a whole, that's just the beginning of a whole bunch of barriers that the market is going to have to take before it truly, I believe, accepts above that level and can continue to the upside. We know that there's a lot of uncertainties out there. There's a whole lot of things that say this market probably shouldn't continue to move to the upside, which means that it probably will. These markets love to make liars out of us. So here is our push to the downside. We broke out and traded higher on Friday. We've got weekly kickoff high just above. Overnight inventory was short a little bit, kind of mixed now. We're in the middle of the range, in the middle of value from Friday, which tells me I'm going to try and stay patient. My dream level is going to probably be this weekly kickoff level here, which was a weekly kickoff low last week that we broke out of on Monday. It provided some degrees of resistance from below again last night. We've got a lower high up against this level says, this level is still an interesting spot. So my dream level for me to look for fish today, if we can get to that area of the lake, is weekly kickoff high, 40.48. And again, there's the barriers above that. We've got last week's high, and we've got a naked point of control above that, which could be somewhat a visual target for a breakout above this level. But again, the fact that we're opening in range and in value says I'm going to relax. I'm going to just sit back, wait for something to come to me. If I sit here and I look for trades inside range and value, I'll find them. Probably not the ones that I'm going to be happy about. So stay calm, stay cool. We're right in the middle of range. No real change in the perception of value of the S&Ps over the weekend. Look for better trade locations as the day goes on. Maybe even just letting the initial balance, that first hour of trade, establish itself, and then focusing on the extremes. We know that a really high percentage of the time, one extreme of the initial balance or the first hour of trade remains the high or the low for the entire session. It's a pretty big percentage of the time. Give you some good opportunities off that. Take a look now at the crude oil. Okay, this is June. By looking at the volume, it looks like maybe tomorrow, which is the schedule switch day, might be the day where the volume is going to turn over to July. July. So I'll be keeping an eye on it, and we'll discuss that tomorrow morning if I've moved over or not. But have to remember, we are in rollover, and that kind of back burners this market for me. Volume and open interest very blurry. You can see that volume has been dropping, but this is only the front month. We added 29,000 in open interest on Friday, but again, that could be very tricky and more based on information from the rollover than from anything else. We'll look at where we've been for the last month. High, low, high, low, high. Is this some sort of a breakout type of formation? I don't know, but I'm not going to try and trade that until I find evidence of acceptance above this level, and I think that's going to be difficult due to the fact that it is rollover. More of our longer, bigger time frame traders are more interested in getting a cheap rollover right now than becoming directional, which they will do if they are provoked. If you poke the bear with the stick, it's going to wake up and it's going to eat you. So we try not to poke the bear with the stick. We don't want anything eating us, but we just have to remember that we're a lot more controlled in the short time frame during rollover than we are being controlled by the longer time frame during rollover. Take a look at the 30-minute chart. So here's our weekly kickoff high. We took a look at it yesterday. We're right back in range and value. We've got maybe some slight overnight shorts, kind of similar to the S&Ps. And it's again, one of those situations where I'm going to just try and relax and be patient, wait for something to come to me. We may find some fish up here at weekly kickoff high. We got a little bit of a gap down below, and we've got a naked point of control just below that. So my focus today is really going to be, again, waiting for the initial balance to establish itself. If the initial balance establishes itself as a high up near this level, this is an interesting spot. I might find some fish there. And if we get a move into this gap or down to this naked point of control, which is a pretty substantial move, that's 105.50. We're at 110. That's a $5 move. Am I gonna be able to detect it before it? No, nobody can. So again, I'm going to try and stay patient. What did we do for the opening range? Did anything happen for the opening range? Oops. So the opening range is the low of the session. So far, it's 32 ticks wide. We've broken out. We are heading back towards it, which might give us the opportunity to limit our risk if we're going to go for the long, if we hold the opening range at the low of the session. But again, I don't see that as a very high probability because, again, where we are as far as the area of value from Friday. So here we are, right in value. ZK, yeah, I see you. I'm going to write that down and go over open interest again on group coaching. We'll do that first. It's the first emailed in or asked question, so we will address that in group coaching. And it is something that is a little vague. It's like everything in futures. It's a tea leaf. All right, so here's the Nasdaq. Similar situation, different market. Same market, different situation. Whatever way you want to call it. So the rally on Friday, low volume, losing 6,400 in open interest. That's a hollow rally. There wasn't money coming in. There was money leaving. So that tells me again that this market is adjusting inventory, and in that inventory adjustment comes the possibility of a continuation to the downside. If we bring in new business to the upside, we've got, this area right up here is it's target rich. We've got our weekly kickoff high. We've got last week's high. We've got this trend line, which is relatively solid as far as touch points. 1, 2, 3 exact touch points. So this area up here has a target on it. It's got something on there that says, okay, be ready when the market comes up here. Get your big tackle out. Get some worms. Get some bait fish. Whatever it is. We're going to find some opportunity up here. The question is, are we going to be able to take advantage of it? We're going to see it. We got to be able to take advantage of it. So here's the 30-minute chart. And, and if that seems like a focus level for me, it's because it kind of is. I mean, it's weekly kickoff. It's a naked point of control. It's last week's high. That just looks like a target-rich environment to me. But here we are in the middle of the range, in the middle of value, just kind of chilling out, waiting for something to happen. I don't know when it's going to happen. It's going to happen, but I don't know when. Got a naked point of control below. Here's the weekly kickoff. Weekly kickoff high above last week's high, not too far. Where did this thing go? Why did this move? There it is. So again, on a Monday, no real reason to get too involved in any of these markets as they sit right now, because we're in range, we're in value. Patience will pay. Here's gold. So 7 business days until gold rolls over. It'll be the August contract, not the July. It'll be the August contract that we roll to. Already seeing some volume kind of falling off on this move to the downside, and we added only 200 in open interest on Friday. Is that a function of rollover, or is the momentum to the downside beginning to fall off? It is suggesting to me that the lower income and volume on Friday is suggesting slowing of momentum. We no doubt about it, the downside structure remains. This is a swing low from the 28th of January that we're looking at as our weekly kickoff low here. That weekly kickoff low is 1784. Look at where our overnight low was, 1785. The market got too cheap there. Buyers backed off even though they were overnight, and they have perhaps attracted some buyers here. So, Gerald, the weekly kickoff level is it's a level that I create where I believe longer time frame traders are going to need to want to or be forced to adjust inventory. Yeah, I'm just seeing that, Giuliano. On my chart, it is a huge black cursor, and it's not showing up on YouTube. Strange. I will fix that. You can see you can kind of see the crosshairs. This is a new development. Let me try something here. Hang on just 1 second. All right, I'll have to yeah, I have to look into this, and I apologize for that. I did not see that one coming. And Vince, you see it. Over here, okay. Yeah, it is a new PC. And Zach sees it as well. All right. I will see if I can get this figured out for everybody. Strange, though. So here, back to gold. Friday's information, if you will. Losing volume, only a little change in open interest does indicate that the momentum may be falling off to the downside. Let's take a look. So here's the overnight move down towards weekly kickoff low. We're in range. We're in value. The only thing that I saw was a potential possibility was really before the open was the test back down to the range from Friday and the low of the week from Friday, but not a really big opportunity, not a real big move or anything, and just basically taking price back into value. So a lot of these markets opening in value, offering us the opportunity to, I think, be really patient today. Just be patient, wait for the market to come to a situation where you're like, okay, now this is interesting. Maybe it's the overnight high. Maybe it's the overnight low, which is weekly kickoff low. We've got a gap above with which to go and repair. We've got a naked point of control up there as well. So if we can't take out the weekly kickoff low, again, that weekly kickoff low is 1784, then I will look for opportunities to buy weakness and see if we can to repair this gap and check up to this naked point of control right here. Right up here, this green line. I know it's hard to, everybody can't really see it, but this is goofy. There's always something. I swear I am going to get that gremlin. You see crosshairs running on the chart, but not the cursor arrow. Okay, well, we're going to get that figured out. Let's get through the euro, the 10-year, and the nat gas, and I'll get this figured out, and we'll be better for a recap today. Here's the euro, and here's the euro against the U.S. dollar. We're starting to see the potential for a little bit of a bear flag here. Are we? I think we might be. Volume very low on Friday. What did we do as far as open interest is concerned? We lost 2,400 in open interest. So again, this move back to the upside on Friday is presenting as hollow. There's no money coming in. It's money leaving in that direction. Obviously, some short covering perhaps. I mean, I would. It was Friday. If I was short up here, I would certainly be considering taking some off. So I think that's what we did on Friday. Open interest, overnight inventory a little bit longish. We have a gap, which if we can't close the gap relatively early, we trade in the direction of the gap, which would have us looking for opportunities for longs. And we've got this huge gap up here with which to go back and repair. If that is what's going on, maybe not today, but at some point in the future, this is a structural weakness that will be revisited. We've got weekly kickoff high just above that, 0547. So we've got a gap, looking to perhaps buy pullbacks, looking to see if we can avoid closing this gap and we can go close this gap. Gap rules. We got gaps on both sides. They're everywhere. Everywhere. Let's take a look at the 10-year. Next Thursday is roll date for the treasuries. We got to keep that in mind. We've been kind of watching this bear flag here, and it is continuing to present as one as volume continues to fall off at higher levels. We lost 2,400. We lost 8,500 on Friday. Maybe that's a little bit of a contrary move there. Kind of looking at this as okay volume on the way up here, and losing open interest basically says that this bear flag might be actually losing momentum, and I think we're at risk of breaking out below that bear flag today. Here, take a look at the 30-minute chart. So we've got 1, 2, 3, 4 points of contact on this bear flag, and we still keep holding in there. What does it mean for us today? Well, we're in range. We're kind of holding above value. If we start to show signs of acceptance below this trend line, I think we could see a pretty substantial downside move. If not, we could see a move right back up to weekly kickoff high, which is 120.02. Net gas. Here's the daily. So net gas is also coming into rollover. It rolls a week from today. So now all week we're going to be kind of charged with trying to feel our way through without the benefit of volume and open interest. See, look at how much volume has died off already. This was crazy last week. Put in a high, put in a low, and then just shut down. We added 7,900 in open interest in the natural gas on Friday. I'm chalking the majority of that up to legging for rollover, legging rolls. We're in a low volume. It's confusing. As we get closer and closer to rollover, we may fall more into range, which I kind of feel like we're already in one. We're centrally located or relatively centrally located between weekly kickoff high and low. Take a look at the 30. Shaw, the profile on TS Trader, you can only start on the hour or the 30. It's kind of a bummer. So you have to on TS Trader. Here's the 30-minute. Now we're starting to see some continuation. We had potential short time frame longs in overnight inventory. I was looking for us to stay patient today, and of course, one of these markets is bound to make a liar out of me. But in essence, all we did was close this gap from here to here. Well, we didn't really have a gap there. There was a very little volume there on Monday, Tuesday, Wednesday, Thursday, Friday, Monday. Very little volume there. We've got a naked point of control from that day that is equal to our weekly kickoff high. So Seeing potential leaving balance, you go with it. You got to manage the risk, though. You got to manage the risk. All right? So I apologize for not being able to see my cursor. I just improved the internet. I just improved the computer. I just improved everything. And yet I have screwed that up. So I'm going to get that fixed for everybody. I think I know where it is, and I will get that straight for everybody. So looking forward to group coaching today. Make sure you just start slow. It's Monday. Mondays are typically not the best trading days for me, so I try and stay patient and look for opportunities as the day goes on. It's going to take a little while for me to get reacclimated with the market and the market's environment, and it's just one of those things I've learned over time that I have to be patient, be willing to miss a couple of trades. That's okay. There's another one coming down the pipe, and one that you may like even more than the one you missed. So looking forward to group coaching today. Looking forward to hopefully being able to see my cursor by the recap, and looking forward to seeing your success. That's what we're here for. So get out there and profit. Trade well today. Let's take our deep breath. And stay humble, grateful, and creative. Keep praying for peace. Be good to yourself. Be good to each other. And I will see you for group coaching at 1 p.m. Central, and back here again for the recap at 3 o'clock. I like the recap. I think it's kind of relaxed, kind of talk about things that have happened in music and in the world, and just kind of wind down from the day. So get out there, trade well. I'll see you in the proverbial trading pit in about 2 minutes. Get out there and profit today. Have a good one.